Welcome to the WTR Small Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's episode, I'm being joined by my colleague and Water Tower Research Technology Analyst, James Kisner, to talk about our latest suite of AI products, to include the AI Flow newsletter, the AI Flow Index, and a brand new edition, the AI Flow Private Pools newsletter. Good afternoon, James, and thanks for joining.
Thanks for having me, Tim.
James, let's start out with the AI Flow newsletter, where you gather dozens of news items related to evidence of accelerating or slowing AI adoption. What were the biggest stories you tracked over the latest issue?
Well, February was probably the most consequential month that we've had since starting this newsletter. The thread connected all is what I would call whiplash, for lack of a better term. So the biggest stories aren't really separate items. They're all connected to story about how fast this market is oscillating between kind of euphoria and then alarm. It kind of started with two viral essays that crystallized the bear case. There's one from a guy named Matt Schumer. He's CEO of Other Side AI. He published a piece that was called "Something Big is Happening," and in that he argued that coders are the canary in the coal mine for every profession. He got 80 million views on X. And then Citrini Research published a 7,000 word scenario, kind of a doomsday scenario called the 2028 Global Intelligence Crisis. And they imagined 10% unemployment and a 38% collapse in the S&P from AI jobs displacement. And that triggered a pretty big sell-off in software and financial stocks. So two kind of big stories right in a row that got people's attention that AI is going to be a disruptive force and not all for good. Um, the optimists struck back almost immediately. Citadel Securities, they pointed to data showing that software engineering jobs their postings are up 11% year over year. So kind of flies in the face of all these coding jobs disappearing. They drew a Microsoft Office analogy. It was feared as a substitute, but ultimately was a complement to office work. And Wharton professor Jeremy Siegel dismissed the Citrini thesis as having no historical or economic basis. So, then as if on cue, less than a week after that, Citrini Block first got published. Block, which is the maker of Square, cut 40% of its workforce. It's about 4,000 employees, explicitly citing AI efficiencies. And you know, one day the data is saying displacement's not happening, and then next a big company cuts 40% of its people because of AI. So the sequence was kind of extraordinary and breathtaking. So, at the same time, the capital employment for AI, has hit levels that defy, historical comparison. OpenAI closed the largest private funding round in history at 110 billion. Nebius and CoreWeave both guided massive increases in CapEx, all tied to signed contracts. But then we had this sort of blow up between Anthropic and the government, where Pentagon put Claude on a supply chain risk list. That's the first time a designation like that has ever been applied to an American company. So the market goes back and forth between AI is real and will cause massive disruption, and to know it won't, to massive investments in AI, to a government ban. So it's just hard to keep up with it all.
So, from an investor perspective, what's the overall takeaway from all that whiplash, James?
Um, so ultimately, my view hasn't really changed. I mean, I remain really bullish on AI capability, and adoption. Progress won't be linear, but the improvements we're seeing with like the latest Claude and ChatGPT models, or and the rise of agentic AI more recently, it's just astounding. It's really just beginning. I do think that job displacement is real, and the gains are concentrating, not spreading. And as I wrote in the newsletter, history is a poor guide for the replacement of intelligence itself. I really struggle to see how the productivity gains from AI result in more jobs, on a net basis. I'm cautious that even the increase in software engineering jobs that we've seen, despite dramatic adoption of AI-driven coding tools, is really just a near-term blip. I mean, I don't see how replacing paralegals with Claude ends up driving more demand for paralegals or creates jobs for those paralegals. So, if you look at the macro backdrop, I mean, it reinforces my concerns. Q4 GDP came in at just 1.4% annualized growth. That was 2.7% below consensus. While tech capex was surging nearly 25% year over year, all other business investment fell for the fifth straight quarter. And Only 30% of 25 college graduates, 2025 college graduates found full-time work in their field. That's down from 41% the year before. And, wealth is concentrating in an ever smaller percentage of U.S. households. So, end of the day, the economics of the business models of Chat and Anthropic are somewhat improved at this point, but the growth is massive. And I do think the technology is so compelling that eventually will work itself out. I just think we've got a lot of work to do as a nation and a planet, from a policy perspective to make sure the disruption is as painless as possible for society.
Great. So now let's shift over to AI Flow Index. For listeners who have not read it, can you explain what it is and how it is constructed?
Sure. So, the AI Flow Index tracks roughly 400 public companies across tech and AI, and we assign each company a proprietary AI centricity score from 1 to 10. The current average is around 6. The index focuses on companies with market caps below 30 billion with a median of 1.4 billion. So really kind of a small and mid cap index. And the biggest contributors by sector are software at about 25%, semis equipment are about 15. Internet and data services are 8, and then other technology is 21, 20%. And then there's another big chunk that we call other industries, like insurance, for example, at 31%. So we intentionally tilt toward undercovered names. The median company has just 6 sell-side analysts covering them, which is very much in line with Water Tower's mission to surface insights on companies investors may know kind of less well.
So, how did the index perform in the latest period, and what does it tell you about where AI sentiment currently stands in the public markets?
First, I want to zoom out and go back a little bit. So we've had this index for 5 months now, October through February.
Mhm.
October, great start, was up a strong 6%, but the cumulative return for the index through February over that time period is around negative 2%. And so that's underperformance versus an S&P that was up 3%. NASDAQ was up 1%, and the Russell 2000 was up 8. So, pretty big underperformance. February was actually a relative bright spot. The index was down 0.6%, but the S&P was down more, 0.9%, and the NASDAQ was down 2.3%. So for the first time in a while, the index held up better than the other benchmarks in a down tape. But it's really the real story here is what's happening underneath. It's kind of a war within the index. Semis are up 60% over the last 5 months. But software is down, nearly 30%. And software is about twice the size. So, maybe a bit less than twice the size of semis after the decline. So, with software down and semis up, it's how you end up with an index that is flat on the surface while there's massive divergence underneath. Um, and the divergence is kind of intensified. I mean, software has just posted back-to-back months of double-digit declines, down 10% in January and down 12% in February. And the market is telling you that it views application software companies as potential victims of AI disruption, not beneficiaries. Meanwhile, semis, other tech, the infrastructure layer keeps getting rewarded. And you can see the valuation too. The index now trades at around 19 times forward earnings versus 22 for the S&P. So pretty big discount for a tech-heavy basket. Back in October was only one turn. So the market is pricing in meaningful more risk. They're very much sorting winners and losers from AI. The picks and shovels trade is alive and well. But anything that could be displaced by AI is getting repriced aggressively.
So let's talk about the brand new product that you put out, the AI Flow Private Pools newsletter. What is it? And explain why investors increasingly care about private company valuations in AI.
Yeah, so this is something I'm really excited about. Using data from PM Insights, which provides daily pricing for non-public company stocks based on aggregated, anonymized secondary market activity from licensed brokers. We're now tracking around 45 companies in AI and have created this WTR AI Private Pools Index. And the reason it matters is that so much of the AI value creation is happening in private markets right now. OpenAI, Anthropic, Databricks, Cursor, Figure AI. These are some of the most important companies in the AI ecosystem. And many investors and corporates just don't have access to the valuations, as they move in real time. And PM Insights data lets us observe equity price valuations, fluctuations between funding rounds and regular financial reporting periods, which gives investors a much more dynamic view of how the market is pricing these names.
So what does the index look like in terms of size and composition?
So, as of March 9th, the total market value of the WTR AI Private Pools Index is about 1.73 trillion. And it's very concentrated. So OpenAI is nearly half of the index, around $800 billion valuation. Anthropic is about a quarter at 450. So other names, Databricks, they're 8%, at 135 billion. And you have Anysphere, which makes Cursor AI. That's the code editor at about 53 billion. The remaining 30 plus companies, make up, less than 50% of the total. So pretty concentrated. Year to date, the index is up 27%, which is, pretty strong for a private, market valuation.
Mhm.
And in the last month alone, the index was up about 7%, and up about 110 billion. So keep in mind, this is not a holding return. It's a reflection of total valuation. So it's not just appreciation, but also capital additions. But looking at an index that PM Insights runs that's price based, that's up about 10% year to date. Well above the decline of around 5% for the S&P and the Nasdaq. So there's a lot of appreciation in there on a kind of holdings return basis as well.
And who are the biggest movers in the latest month?
By far the biggest mover in dollar terms was Anthropic. They gained 92 billion in market value in a single month. That's about 26% increase versus to about 450 billion. They did a $30 billion fundraise, but they've also had accelerating adoption of Claude Code and some enterprise traction, despite the Pentagon situation. In fact, arguably because of it. OpenAI was up 14 billion. Cerebras Systems was the biggest percentage gainer, up nearly 40% to 23 billion. Keep in mind, Cerebras is building wafer scale chips, purpose-built for AI training and inference. So they're getting some traction as the market looks for alternatives to NVIDIA's GPU architecture. On the downside, Scale AI had the largest decline. They were down 37%, to about 4 billion. They do data labeling for AI training. And so the market is kind of questioning how much of that workload gets automated as models improve at self-supervision and synthetic data generation. A couple other movers were Cohere. They were down 18%. It's a sort of an also ran in the LLM space. And Flock Safety, you may have heard of. They're down 18% as well. They make AI-powered license plate recognition cameras for law enforcement,
Mhm.
and so maybe some headwinds around AI surveillance and public safety spending. So the takeaway is that even within the private AI universe, you're seeing real differentiation. Frontier model labs are and specialized infrastructure plays are commanding premiums, while some of the data tooling and more niche application names are facing more pressure.
Great. Well, thanks for joining me today, James, to talk about the very interesting reports you've been writing of late.
My pleasure.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.